All right, we're going to look at JD.com earnings tomorrow morning, and the market just took a big leg lower over the last 15, 20 minutes here. Okay, earnings tomorrow morning. So what is the expected move, everyone? And then, Mickey, I'm going to ask you, and we'll walk through it. Okay, anybody else? John, Glenn, I got you guys. Anybody else? Okay, so Mickey, what we do is we look at the money straddle for the expiration that we are looking at. So in this case, we're looking at this week's 27 strike call and 27 strike put. Okay, so if we add that together, we get about $2.28, but we're about 15 cents away from the strike. So if we back out that 15 cents, that brings us down to about $2.15. Okay, so the expected move in JD is about $2.15. So then that would give us an expected range, about $24.70 up to $29. Okay? Everybody on board with that? Everybody good? Okay, let's look at a chart. I mean, this thing is, kind of moves right with the tariff talks. It is actually down at some major support right now, both off of kind of the 200-day moving average and the big volume here. Okay. Down below, where's the next level of support? Well, pretty much right there at this volume area. Up above, there's definitely some resistance here. This is the 50-day moving average, and then obviously, whoops, kind of right in this area right here. Is it going to hold support right here? If it holds support, nice. If not, it goes down here. So, if anything, I'd say it's probably looking a little weak. But I wouldn't really necessarily take a directional basis on that. I'd rather be looking at an iron condor or a strangle swap and see what volatility is doing. And we can see from the chart below here, volatility is definitely high. So There's support just below market at 200-day moving average of 26.30. Then down at 24. And there is resistance above at 50-day moving average of 29.20. Then at 31 half-ish. Okay. Well, let's see what we got. With the expected range of, let's call it 24.5 to 29, if we look at, let's say, an iron condor here, just centering those strikes. So we've got the 25, 24, and 28.5, 29.5 iron condor, trading about 45 cents. That gives us break evens on this of 24.55 up to 28.95. Okay, pretty good in regards to where the expected move is. But I want to get a little bit less, a little bit more than 45 cents for that. And that's if we could even get 45. Now that I look at it, very tight market, so it's going to be easy to trade because very liquid, very tight market, but it's more like 43 cents here. Put that back up on the screen. Okay. So, don't really want to do an iron condor at that price. Now, let's see what volatility is doing this week versus sometime out next week or maybe out to regular September. So let's look at the 24 half. And the 29. And let's even just go out 1 week and see. All right, something like that is going to cost about a quarter, maybe a little bit more, 27, 28 cents. And there's nothing really to it. Looks like volatility when you compare one expiration versus another looks to be pretty close, pretty much in line with where it should be. Everybody see what I'm talking about? I'm looking at the P&L graph here just from where I have the volatilities adjusted, and you know, it's nothing to write home about. So I would look at this and say, you know what? Nothing I'm going to do here. Yeah, so two things, Mark, when we look at adjusting vols. We want to look, obviously, at where has vol been, what is the right fair volatility. So when I look at this chart right here, I know it's coming down, right? It's absolutely coming down. It's just a matter of how far is it coming down. A good barometer, a good rule of thumb when you're going into earnings, where we know that volatility is very, very expensive, as it should be, and we know it's going to be coming down. A good rule of thumb is that the near-term vol that we're looking at, we reduce by around 50%. And then subsequent expirations, so like next week, we look at about a 40% reduction, and then little by little down from there the further we go out. Okay, but the bottom line is, you know, you don't want to buy vol in here if it's much higher than 40%. Because it is definitely going to go lower than that. You're welcome. And this just comes with practice, really, you know, looking at adjusting vols. It really, really just comes with practice. Okay. Anybody have any questions on JD? In fact, you know, I don't know, I'm going to take it off the board. No reason it should even be on our watch list anymore. Okay, let me get that recording going and I'll put it up in the room and I'll be right back, guys.